back to what the markets are actually hinting at. Let's take it across to Geoff Dennis and find out what he's making of the global construct right now. Geoff, hi, good morning. Good to have you on the show, and evening at your end. Just wanted to understand what's Trump going to do when it comes to, rates. I know it's not his, sort of department, but he, pretty strong commentary saying that the Fed doesn't know anything and he's pushing forward for rate cuts.
Well, I wish we all knew what Trump was going to do because, as you said in your introduction, we just don't know. And maybe in the first 2 or 3 days of his presidency, Trump 2.0, he's actually been a little bit more benign than we'd expected. Now, my view right now is that the Fed will find it very hard to reduce interest rates in 2025. I previously thought they might cut rates by 50 basis points. I think it's going to be really hard to get there now, given what we know about the economy, etc. The economy's strong. Inflation is leveling out at around the 3% plus for core, above the Fed's target. And my concern, and I think it will come through eventually, is that tariff increases, and there will be some, are inflationary. And at the same time, tax cuts are just not appropriate right now because they will blow the budget deficit out, which is already relatively high. So from what we know at the moment, whatever the Trump is saying, I think it's really, really hard for the Fed to be reducing rates at this point. And I assume they're going to be on hold at least for several months until we get more from Trump and more from the economic data.
Mr. Dennis, if I frankly look at the first 72 hours of the Trump regime, and 72 hours is a lot to judge what the Trump regime would look like, there is nothing which really could be called as a very, reflex action. Nothing on tariff, nothing on crude, nothing has come even on geopolitical front. So do you think that the Trump regime so far is off to a predictable start? Not a scary start?
Yeah, I guess so. I think a lot of people felt that all this talk about putting tariffs on day one, solving the Ukraine-Russia war on day one would not happen in practice. And of course, that's been true. But he has done a lot of things with all these executive actions that he's taken, although some are being challenged in the courts. And trust me, over here, the feeling is that he's done a lot of stuff, particularly, I think, to do with the border and immigration. And I think that's the main focus right now, which is not, of course, particularly a market driver. But this is the art of the deal. He's a deal maker. And I think eventually we're going to come around to the likelihood that he will raise tariffs on a number of countries, on Europe and also on China. He said the most extraordinary thing in his speech to Davos today. He said, if overseas companies want to sell in the US, they've got to produce in the US. And if they don't produce in the US, the imports will have tariffs added to them. That is an extraordinary statement. That means any imports coming in from overseas, I guess, are going to have tariffs. So tariffs are not off the table at all. We just haven't focused on them yet. And I think it would be very unwise for the markets to believe that he's suddenly going to go soft on tariffs, because I just don't think that's correct as we go, over the next several months.
Okay. How long do you think this long dollar trade would continue? I mean, nothing goes in a straight line, but this entire long-live Donald Trump, long-live dollar trade is moving in a straight line.
I think my calls basically are that the bond market deteriorates again. We see bond yields rising above 5% for 10-year yields. That's been my call for the year, and I still think that's correct, even though yields have come down about 20 basis points over the last week or so. That is because of the budget deficit story, also because of inflation, also probably because the Fed doesn't have a lot of room to reduce rates. If you combine the Fed really not yet in a position to reduce rates further with the bond yield increase, I think the dollar's going to go back up again. It's pulled back a little bit in the last few days. I think it's going to go back up again. I think it's going to go through parity against the euro, for example. In other words, I don't think the dollar bull run is over. It's just pausing. And that creates a complicated environment. As you will know, in India, it creates a complicated environment for emerging market investing.
Geoff, so good having you on the show. Thanks so much for your time today.
Thank you.